Good afternoon, everybody, and a warm welcome to our last presentation at today's MBB Research German Select Conference. It's my pleasure to introduce Daphne Zanak, Head of Investor Relations at Indus Holding. Ms. Zanak will guide us through the presentation and share deeper insights into the company's structure, the portfolio, and recent performance. Before we start, this conference is being recorded and all participants are in a listen-only mode. After the presentation, we will move on to a Q&A session, and if you have any questions, please submit them via the chat box. We at MBB Research cover Indus Holding, and I will also provide a link to our most recent research report via the chat box. And without further ado, I'll hand it over to you, Ms. Zanak. The floor is yours.
Thank you very much. Thank you to the MWB team for hosting us. Just in time after the H1 results, which we presented some weeks ago, and now we start our roadshow marathon and have some conferences coming up. So I'm happy to give you an insight into the equity story of Indus and the recent developments. I will also show a little movie sequence in between, and at the end you can ask questions. Some of you might know Indus and some of you might not, so this will be like hopefully a fitting mix of both information for the ones that know Indus and for the ones that actually are new to the equity story. So what's Indus? What's Indus doing? So basically the equity story or the strategy update we announced during the Capital Markets Day in March, and Indus has now a new slogan called Empowering Mittelstand. Some of you might remember Indus Parcours Perform, but Indus is a holding company that's buying Mittelstand companies, small and medium-sized businesses in the engineering field with a high technological focus. So we are not like the classical private equity company that basically restructures companies, makes them profitable, and brings them to an IPO, sells them. Selling companies is not the value chain of Indus. We develop the companies. So engineering is as its core. Also, we believe in the people and the people as entrepreneurs that have built a life's work that we want to grow sustainably. So what's special about Indus is that basically the management board knows their business. So basically, in the end, the most of the management board members are engineers and not ex-bankers. So for example, Dr. Großmann, Dr. Schmidt, and Ms. Degenhardt and Axel Meyer are all engineers, and the CFO is ex-KPMG. And basically, they are very focused on finding the niche companies within the engineering field, looking for the innovation potential, looking for the operational excellence potential, and basically helping them to grow. So what we call the entire strategy is basically buy and grow. That's like we have the buy and grow ambition of achieving like 3 billion in sales by 2030 and around 600 million through acquisitions. And this is like what I currently said. Basically, the 5 management board members have responsibilities for either central functions or for their segment management. For instance, Axel Meyer is responsible for engineering, Dr. Jörg Großmann for infrastructure, and the COO, Gudrun Degenhardt, is responsible for material solutions. And I will go into further detail what these segments actually inherit. The CEO, Dr. Schmidt, is responsible for M&A strategy, investor relations, and further topics, and the CFO, obviously, for reporting and everything that's inherited within that field. So overall, again, the passion is technology. It's finding like niche providers that are very profitable, that need some maybe financial support, that need basically like operational excellence input, market excellence input from the holding, and that we can develop them further within the technological field. So engineering, infrastructure, material solutions are the 3 segments. We used to have 5 segments for the one that historically know Indus, but these are the growth fields we defined. Overall, the key figures, just as a scale, 1.72 billion revenues in 2024 and an adjusted EBITDA of 154 million in 2024. And also, Indus is highly cash generative. That's why we are also guiding above 90 million for the 2025 financial year. So if you're thinking about the overall investment case, how does Indus create value, and why should an investor invest in Indus instead of investing maybe in some, well, other companies that are within the manufacturing value chain? Basically, you get the access to a portfolio of companies, of diversified medium-sized companies, with focus on industrial engineering that you would not otherwise have. Basically, like, we have a dynamic acquisition program, and we also want to grow organically. So both, basically, like 2/3 should be organic growth, and the 1/3 should be coming from acquisitions. And overall, and I will go into this further detail when I come to the financials, Indus is focused on cash generation and always pays dividends. There was not one year where Indus did not pay dividends. So it's an asset class which cannot be directly invested via the capital market. So what I want to do now is do a little voiceover by our management board members and play a little movie, which we also played out at the AGM, to give you a sense of Indus.
Empowering Mittelstand is our growth strategy until 2030. It enables strong inorganic growth and sustained organic growth. By 2030, we aim at sales of around 3 billion euros, highly profitable with an adjusted EBITDA of over 330 million. How will we achieve this? With strong acquisitions, engineering expertise, and targeted internationalization. By 2030, we will have invested around 500 million euros in acquisitions. We will generate annual sales of at least 600 million euro from them. We will also buy larger targets. And if portfolio companies do not meet our growth or profitability expectations, we also sell. Our focus at Indus is to buy and grow companies with unique engineering capabilities in industrial technologies. We are proud that we understand technology in more detail than other investors, even when companies operate in a niche market. We establish technology fields within each segment to focus on product or market-driven growth opportunities. We have defined 3 areas of actions for our global growth. For growth acquisitions on portfolio level, we expand our search area to Europe. For add-on acquisitions, we search globally. For the organic growth of our existing investments, we put strong focus on further internationalization and invest accordingly. Our track record of finding tailored succession solutions for family-owned businesses makes us a respected partner for entrepreneurs. With our growth strategy, we enable dynamic development for family-owned businesses and secure their future.
Yes, so you got a little word from our CEO. So now I'm going to go into more detail what basically the acquisition strategy is. So it's basically focused on 2 levels. You have the growth acquisitions, which are done on portfolio, like basically on the holding level, and you have the add-on acquisitions. So meaning that one of the portfolio companies might want to expand a sales activity, might want to strengthen their product or market focus. So we focus on these 2 strategies. And as Dr. Schmidt pointed out before, growth acquisitions are mostly in Europe-focused Germany, and add-on acquisitions can also be abroad, for instance, US, to get like a better access to the market. You open like a sales point, for instance. As I previously pointed out, Indus is only acquiring profitable companies that are well running and then need to go towards the next development stage. So the financial criteria go from 20 to 100 million, and the company needs to have like an adjusted EBITDA ratio above 10%. And obviously there needs to be no debt, no liabilities, and mostly cash generative. As I said before, the industry criteria is the focus on technology with a root in engineering. And there need to be obviously growth perspectives internationally or vertically. What I also want to point out that formally we did not actually point out that Indus might sell some companies that might not fit into the portfolio. But with the new strategy empowering Mittelstand, we also pointed out that some companies which do not fit the long-term perspective or the growth perspectives of Indus future plan might be disposed. Yeah. So this is basically what I just said to the acquisitions worldwide. And now I want to give you an update about the strategy empowering Mittelstand, which is basically founded on 3 pillars. So the 3 pillars are empowering internationalization, empowering M&A, and empowering technology. So as you know, one second, my screen just froze, I think. So, okay. So empowering M&A, I've already actually talked about that we want to expand, for instance, like acquisitions, that we want to expand our acquisition profile towards international growth. And but we also want to basically increase the international growth of our existing portfolio companies. So if you look into our latest updates and M&A activities, we've done quite a lot of work there. We already done 5 acquisitions this year, mostly in the infrastructure and the engineering segment. I'm not going to go into technical detail, and I hope you forgive, but this might just not be interesting for everyone. But they have a website. You can look up the websites, and they're basically like add-on acquisitions to the portfolio companies which we actually have. But it's interesting for you to see, like electro trading, for instance, Sweden, and our footprint in the US increased by HBS and the MatchFab group. What I suggest now is basically to go into the financials, but let me first point out how we want to strengthen our technology expertise. In addition to what I've already told and the grasp of the sense of Indus you might already have, we set up a venture clienting program. We increased our workforce there, and one colleague actually is new on board, which actually looks at cooperation processes for collaboration among portfolio companies with tech startups to drive innovation. So overall, let's just go to the first half of the year and what happened at Indus, and keeping the time in mind, I think I might have some 5 to 10 minutes. So basically, like, let's just summarize. So 5 add-on acquisitions in 2025, therefore 4 in the first half. Stable sales, almost at previous year's level, and Q2 stronger than in the previous year. Obviously, you have the economic conditions that influence your daily business and your operations, like US tariffs and Chinese export controls and weak dollar weigh on the adjusted EBITDA. And one interesting update on our financial situation, that Indus has placed a promissory note loan of 125 million, which is done within the regular refinancing, usually every year. Indus has confirmed the forecast of the sales between 1.7 and 1.85 billion and the adjusted EBITDA 130 and 165 million. But I will go into this further detail because we adjusted the guidance within the segments of engineering and material solutions. So looking at the incoming orders, I mean, this is something that helps you to understand how why we actually confirm our guidance for 2025. I mean, we've got growing incoming orders in difficult markets, and you also have to understand that, for instance, engineering is a segment that's quite back-end loaded. So basically, you see most of the revenue and the EBITDA coming in Q4. So sales, as I previously pointed out, I mean, like nearly on last year's level, I mean, like 837 million, and the outlook is 1.7 to 1.85 billion euros. So we are expecting a better second half, which is not different to the years before. We're confirming the guidance of 130 to 165 million of adjusted EBITDA and a 7.5 to a 9% adjusted EBITDA margin. So this is a very interesting chart. I mean, looking at the free cash flow, for instance, you're seeing now, okay, minus 7.9, which is well below the 90 million we want to achieve for the full year. But let me point out there are three effects you have to consider how we're going to get there. Because first of all, the capex, you know, not every segment is running at the 100% capacity. So basically, you don't need all of the investments, right? Secondly, working capital, and then of course inventory. So we're positive that we're going to achieve the guidance of above 90 million free cash flow for 2025. This is just a good overview of the cash flow figure of net debt and the equity ratio. As I previously said, I mean, we've just refinanced or given out a promissory note, and usually the net debt to EBITDA is from 2 to 2.5 times. Just going to run through the segments so you have a little glance over the segments. I mean, all of the segments in terms of revenue are pretty equal. I mean, in the terms of revenue size. But let's just give you a picture of around the industry trend. I mean, everyone has looked at the German industry trend, and if you look at engineering, I mean, the sentiment is well improving cautiously, but still the environment is challenging. And the same thing you can see in our numbers. As I said before, it's very back-end loaded, so we're expecting a better development in the second half. Let's just go to the segment infrastructure. I mean, infrastructure is a very mixed outlook. First of all, you've got like 2/3 of the segment might be connected to classical infrastructure and 1/3 to residential. So you have like a diverging trend within the construction sector, but nevertheless very resilient, but still cost pressure that you can feel within this segment. So overall, I mean, nevertheless, I mean, revenue increased by 25, incoming orders increased by 25%. So overall as well, expecting a better performance towards the second half. Sorry, I just went back. Sorry. So basically, like in the end, like incoming orders, so like slightly up, but nevertheless, we basically like expecting that the infrastructure is also performing better in the second half, but the revenue was up 5.5%. So now we covered engineering, like challenging market environment, better second half expected. We covered infrastructure, which is like quite resilient, but diverging trends between residential and like infrastructure. And now I want to move towards the segment material solutions, and I want to put your, maybe like not all of you have seen the ad hoc announcement we've done, because like a big supply which is needed in the material solutions segment is tungsten carbide. And tungsten carbide is needed by the biggest subsidiary we basically have called Simon, and it was under pressure at the beginning of the year, but we're basically able to secure the supply for tungsten carbide. So the outlook is cautiously optimistic for late 2025. Sorry, 1 second. So when you think about the entire guidance and the entire, like, how is it all put together, or what did we actually change, or how do we confirm the guidance? That's what I initially said. We changed the guidance in engineering to adjusted EBITDA to be consistent, and in material solutions slightly decreasing sales and adjusted EBITDA strongly decreasing, which is an improvement. So we weakened the guidance in engineering and increased it in material solutions due to the better supply situation of tungsten carbide, as I said before. So just some summary key figures for you if you're interested. Indus is always paying dividends. Indus has very stable anchor shareholders, Versicherungskammer Bayern, Protector, and some others which might not be visible. And I'm interested in your questions. Sorry, I have a cough. 1 second. Yeah.
Daphne, many thanks for these insights, and we will move on to the Q&A session. We received several questions already, so I will start with the first one. You have mentioned tungsten already. What risks remain from US tariffs and Chinese export controls, and how secure is the tungsten supply chain now?
I mean, it's safe for this year to say that the supply is safe for this year. I mean, considering the economic situations and the actual tariff situation, how it's now, how it's actually at this point. If things change, you have to reevaluate, but we cannot talk for 2026. But now for this year, it's, I mean, it's safe, the supply situation.
Okay. You've mentioned the year 2026 already, but there have been potentially more than one challenges in these markets. So do you expect the mentioned challenges, which have led to the downward revision of the initial guidance for 2025, to continue into 2026?
It's too early. I mean, it's too early to say to 2026. We have an ambition for 2030, which we communicated openly, like a revenue of 3 billion, which is quite a way to go. I cannot give any guidance for 2026, or if it will be worse or if it will be better. So I'm saying nothing. So just write down, and we are not saying anything because we haven't given out any guidance. We're working on 2025. And the message is clear that we confirm the guidance, that we have certain measurements to get there. But what you can take away, it's challenging, but to navigate through the actual market. But nevertheless, it's not. We're not pessimistic. Yeah.
Okay, thanks. You've right now mentioned the medium-term guidance. A quite common question which occurs is, how do you want to achieve this guidance? Is it more M&A driven, organic driven? Is there a split you are actually targeting?
Yeah, basically, like 2/3 should come from organic growth, and we've got an ambitious like M&A program. Around 600 million should come from M&A, and 1/3 of the growth should come from M&A. Yeah, that's basically it. Yeah.
Okay, thank you. Getting back to the nearer targets, speaking about 2025, what steps are you taking to achieve your margin and cash flow targets despite higher costs?
Interesting. I'm starting with the cash flow question. So there are 3 measures to achieve the free cash flow, which we actually put out as a target. So you have to think about that. Not all of the businesses are running at 100% capacity. That's what I initially said. So you can withdraw some initially planned investments. Also, you have to work on your inventory, and also have to actively work on your working capital. So that's how you actually can achieve your free cash flow guidance. And in addition, you're expecting some prepayments to be made, and obviously this influences your free cash flow too. In terms of margin, don't be tricked by like a quarterly view on the margins, because there's a different fluctuation. I mean, there's a lot of the EBITDA is coming in the fourth quarter for engineering, for instance, and obviously you're taking basically your top line has to improve, so it basically trickles down to your EBITDA. But what I'm saying is, the Q2, for instance, for engineering is not like a representative quarter. It should be more Q3 or Q4, and that's mostly for most of the segments we have. Yeah.
Thank you for answering this question. Let's have a look on the order situation. The order income looks strong at the first glance, but it's also affected positively by acquisitions. How did order backlog develop percentually from the old parts of the Indus? So, which size of the order backlog is organically and which is M&A driven?
Mm-hmm. We don't have organic order backlog, but Tom, I think it's you that's asking me. I'm seeing the name, and we see each other the next days at another conference. I think the thing is, there's no such thing as organic order backlog. But if you look at the size of the companies that we acquired, right, they're very small. I mean, they do like a double-digit revenue a year, or a single-digit revenue a year. So it should be a small influence in the entire backlog. But that's basically the message, yeah.
Mm-hmm. There's kind of a follow-up question or a similar question. How are recent acquisitions and international expansion affecting your 2025 growth outlook?
Well, basically, what we have to consider is that the acquisitions, we're not adjusting any. We haven't adjusted our guidance to. Well, let's take a step back. I mean, we counted in some acquisitions that we're going to do in 2025, and you're looking at some revenue contribution and EBITDA contribution, and obviously this hasn't changed. I mean, there's nothing to actually adjust the guidance for. Yeah.
Perfect. Then we just check. Another quite interesting question is when I compare your return on invested capital with that of other serial acquirers, I see historically much lower returns. Where does this come from, and what are your goals for the return on invested capital in the future?
That's an interesting question, because return on invested capital is maybe the most interesting KPI for a holding company. Are you investing effectively? If you, Carsten, have looked at the history of Indus, we also used to have automotive serial suppliers, which we disposed of. And then if you calculated the ROCE, it went up after we disposed of the automotive serial suppliers. And obviously, it might be influenced now with the operational performance again. So that's what I can say about Indus, right? Like it basically went up after we basically disposed of the serial suppliers. It went above, depending on how you calculate it, but looking at analyst notes, it went above 10%, the ROCE, and then it might have decreased again. Other serial acquirers, I don't know what number you're looking at. And there are lots of calculations in the capital employed. What do you take into the capital employed? What do you take into the EBIT? Do you take out impairments? Do you take out goodwill? There's so many calculations, and it's quite difficult to answer this within this forum now.
Thank you. And another question, a quite interesting one, is how is Indus leveraging digitization and innovation across its segments to drive further growth?
Yes, we have, like, I call them in-house consultants, like for full-time employees that are basically looking at operational excellence, market excellence. And there's one new colleague, she's looking at artificial intelligence and venture clienting. So they have their agenda, and they have their agenda to look at each and every subsidiary or holding company and drive forward these strategic parts. Yes.
That's quite interesting. Maybe a short follow-up. How is AI playing a role in your portfolio?
Yes, that's very interesting, because it plays a role within the Simon Group, for instance. If you want to recycle material, you need certain You need a certain software, or you need a certain observatory software that basically sees material which is useful and the ones that is not useful for recycling. So Simon has already worked in terms of recycling and on an AI application. And also AI is in all within the manufacturing processes. There are several initiatives, we call it AI initiatives, to drive this forward. Yeah.
Perfect. Thanks a lot, Daphne. We have answered all the questions and we are absolutely in time. And so this will bring me to the end of our today's conference. A big thank you to all the participants and their insightful questions. And right now, a special thank you to you, Daphne, for your time
Thank you.
and your insights. We have sent several emails out to all participants, so please share your feedback and we will share it with each company. So it would be great supporting us with this. And another thing I want to highlight is um, our upcoming events and especially our next conference will be the High Tech Engineering Conference, which will take place on August the 16th with 14, you've quite heard well, 14 companies that day, which will be full of deep insights. All details will be available on researchhub.com. And actually, this brings me definitely to an end. And I just want to say thank you to everyone and take care.